All right, let's talk about a really cool Forex strategy that's been getting a lot of attention. It's called the BBMA plus BYSTR STA system. The whole idea here is to combine two powerful methods to give you a complete trading plan from start to finish. So let's dive right in and break it down.
At the end of the day, every single trader is wrestling with the same two massive questions, right? First, which way is this thing actually going? And second, okay, if I know the direction, where's the perfect spot to get in? The spot that gives you the best shot at a win with the least amount of risk. Well, that's exactly what this system is built to solve.
So here's how we're going to tackle this. First up, we'll look at BMA for finding our overall direction. Then we'll get into the nitty-gritty with BXTR for pinpointing our entries. After that, we'll put it all together into a simple two-step plan. And finally, and this is super important, we'll talk about how to know when a trade setup just isn't going to work out.
Okay, let's kick things off with the first piece of the puzzle, BBMA. I want you to think of this part of the system as your trading telescope. Seriously. Its only job is to look at the big picture, to tell you which way the major trend is flowing. We're not worried about the exact entry price yet, just the direction.
So, what exactly is BBMA? Well, the name stands for Bollinger Bands and Moving Averages. It's a method that uses these two classic indicators, but in a very specific way. The whole goal is to watch how the price, the candles, react to these bands and lines. And by doing that, we get a super clear read on the market's trend and, more importantly, where it's likely headed next.
And here's the best part. We're not just staring at the charts hoping for a sign. The system gives us two very specific signals to look for. Think of them like giant flashing neon signs on your chart. When you see one of these, the market is basically telling you, hey, I'm committed to going this way.
The first signal is called CSAK. It stands for a phrase that basically means strong direction candle, and it's exactly what it sounds like. It's a candle that closes with authority, breaking through both the moving averages and that middle Bollinger Band. You can think of it as the first shot across the bow, a big hint that a new trend is about to get started. Now, the second signal, CSM, or candlestick momentum, this one is the real deal. This is when a candle has so much force behind it that it actually closes outside of the Bollinger Bands. When you see this, it's not just a hint anymore. The market is screaming that the trend is on, it's strong, and it has some serious momentum behind it.
All right, so our telescope, the BBMA, has given us the direction. We know if we're looking to buy or sell. Now it's time to put down the telescope and pick up the microscope. That's where the Bystra system comes in. Its job is to zoom way in on the price action and help us find a super precise, high-probability spot to place our trade. So, the Bystra system is pure price action. It's all about finding, and crucially, validating key support and resistance levels. We call them SNR for short. Now remember, Bystra doesn't care about the trend. It assumes we've already figured that out with BBMA. All Bystra does is give us that exact surgical entry point. So how do we actually find one of these zones? Well, one of the core ideas is this simple 2+1 candle formula. It works like this. First, you spot a single candle, let's say a red sell candle. Then you confirm that it's surrounded by at least two candles of the opposite color, so two green buy candles. When the price eventually breaks that little structure, bam, that area is now a validated support or resistance level. The real magic, though, is waiting for the price to come back and retest that zone. That's our entry.
Now, the BSTRS system has a few specific setups with their own names, like SNRC1, SNRC2, even one called Quasimodo Continuation. We're not going to get into the weeds on every single one right now. Just know that they're all based on visual repeatable patterns, kind of like that 2+1 rule we just talked about. They're just reliable ways to spot these key entry zones.
Okay, this is where it all comes together. This is the fun part. We're going to combine these two powerful ideas into one simple standard operating procedure, an SOP. This is us finally using the telescope and the microscope together to build a complete step-by-step trading plan.
So, here's the game plan for your initial entry. It's a simple 4-step process. Step 1, pull out the telescope. You're on a higher time frame like the H4, and you're looking for one of those big signals, a CSK or a CSM. Got it? Okay, that's your direction for the trade. Step 2, now you drop down to a lower time frame, maybe the H1. Step 3, this is where you grab the microscope. You're looking for a valid Bystra setup that's going in the same direction as your H4 signal. And finally, step 4, you set your entry order at that Bystra zone and you just wait. That's it. You let the market come to you. No chasing. All right, so that first plan, SOP1, that's for catching the very first move after a big signal on the higher time frame. But let's be real, sometimes you miss it, right? We've all been there. That's where SOP2, the continuation entry, is a lifesaver. This one is for getting in after the move has already started. The trigger here is a new CSAK signal, but on your lower time frame. It basically confirms the trend is still going strong and gives you a second chance to jump aboard or even add to your winning trade.
Let's run through a quick example so this really clicks. Imagine you're looking at the 4-hour chart and you see a massive CSM sell signal, okay? Direction, sell. What do? You immediately drop down to the 1-hour chart, you scan for a beast or setup, and there it is, a perfect SNRC1 zone. All you have to do is set a sell limit order right there and just walk away. That's the whole playbook, right there.
Now, we have to talk about something that's just as important as finding a great entry, maybe even more important. Because, let's face it, no system works 100% of the time. Trading is all about playing the probabilities. So let's talk about how to know when a setup might be a dud.
So why do these setups sometimes fail? Well, there are usually 3 main culprits. First, it's possible the price already reacted to a different valid zone that you just didn't spot. It happens. Second, your time frames might be fighting each other. H4 is screaming sell, but H1 is still pushing up. That's a huge red flag. And third, the most obvious one. The price just smashes right through your entry zone and closes on the other side. That's called a break zone, and it means your setup is officially dead. Time to move on. And that really brings us to a fantastic piece of advice from the person who developed this system. I want you to really let this sink in. They said, it's normal if you lose, and you will learn something from that lose. It's called process. It's so true. Losing isn't a failure. It's just part of the process. Every losing trade is a tuition payment for your trading education, as long as you learn from it.
So there you have it, a complete system, a telescope for direction and a microscope for your entry. The entire framework is right here. The only thing left to ask is, how are you going to use it to find your next trade?